Investing in agriculture, a public-private partnership to boost investment, is what this high-level dialogue arranged by the European Union this evening here in Kampala is seeking to attain. Through a combined equity fund to the tune of 40 million euros, the kitty that should be ready for private sector access by early next year may after all be delayed, owing to the yet-to-be enacted public-private partnership law.
What will be the distribution between public and private? How will the regulatory environment protect the fund and investors in this very occasion? Are there clients enough for the fund to prosper? How big shall be the fund? How will be the relations between the governing board of the fund, the government on one side, the donors on the others, and the private investors on the other side? So it's a complex setup. Very likely this will start small in size in order to minimize the impact and the risk.
According to the visiting EU Commissioner for Development Cooperation, Andrew Speyberg, there is also need for Uganda to tackle structural weaknesses within the agricultural activity chain if the dominant smallholder farmers are to reap from this huge fund.
Our rural development strategy supports the smallholders. This is experimental fund because we see that there have been too low growth in agriculture output in the times where have been huge demands in the market. So there is structural weakness. And from the discussions at the panel,
there is concern, for instance, that in spite of cumulative allocation to the NADS program in excess of 133 billion shillings, agricultural contribution to the country's GDP has totally failed to scale above 1%. Reina Ojen, NTV Business.